Hey, good morning, everybody. It's Pete. Welcome to Stocks for Breakfast. It is Friday, March 27th, 2020. Hope everybody is healthy. Hope everybody is self-quarantined. It is very important, regardless of your political affiliation right now, that it is just smart for us to drop that curve of the spread of what's going on right now. So please, everybody, be responsible. I hope you're okay. Today, we're going to get right into it. We're going to talk about the recent three-day rally that we've had. We're actually going to look at some longer term, and longer term is very relative right now, longer term swing trades, because some of the charts are actually setting up in a position where we can start to look at some opportunities on the short side again. But we don't want to get caught up in what we got messed up on yesterday a little bit. I had a conversation with someone yesterday in our private coaching group where how did we miss a couple of entry longs, and it was because we were only looking for short sales because we thought the market was a little bit overdone with 21% move in a couple of days. That is a little bit overdone, but today that's kind of normal, for lack of a better way of putting it. It's not going to stay that way, though, which is actually what we're going to get into. The volatility we have right now has a shelf life. And if you look at the recent charts, especially the SPY, we're going to take a look at that in a second, and then we're going to jump into a bunch of stocks today. It's very interesting that some people are actually calling the bottom is in, and there's no way is the bottom in already. The moving forward of what's about to happen to the economy, yes, we can definitely get open again as the president is now saying, let's get open by Easter. Millions of businesses are going to be out of business. And that's going to affect the rest of 2020. So it's very important you make the distinction between how you want to manage your 401k versus how you want to manage your trading account. The trading account is going to have some incredible opportunities. The 401k is going to take some serious pots of coffee with your financial advisor to discuss what the next moves are going to be, because in the long run, yep, that line is really a monster blue arrow to the upside, green arrow, whatever color you want to use. But we also have, depending on where you are, the big dip that we're in right now, you might have to make some decisions if you need that money sooner than later. Is pulling the plug and getting out right now on all of these longs meaning, and actually, Penny, I was asked by Jason to use to make sure some terminology is used. So I want to make sure that I don't speak too fast or too experienced to everybody. So I need to sometimes dial it back. So when I say long means buying, short means selling. Okay, and short actually there's even a distinction between short and selling. Short selling means that you're borrowing stock from your broker dealer, anticipating the stock go down so that you buy it back later. And when you buy back a short sale, that means you're covering the trade. That's the right trader terminology. When you bought stock and it goes up or it goes down, but let's say it goes up, you sell to get out of the position. So you sell after you bought a long, you short sell, and when you want to exit that trade, you buy it back. But when you buy it back, it's called covering it. So some cool trader terminology there. I hope everybody can slow that down and write it down. You can sound really cool at a barbecue over the weekend, if and when we can actually barbecue again, right? So anyway, I'm going to go right over into the charts because I know that's what everybody wants to take a look at. But the one lesson I want to make sure that we cover today, and I'll show it on the charts, but I want to make sure it's at the beginning of the video, is when you go into the day, there's a very big difference between having a bias and having an opinion. And I'll explain what that means because it sounds like it's the same, but it's really not. When you have a bias, that's what you're expecting to have happened that day, and you build your if-then scenario. So obviously, if you're expecting something and then it does not play itself out, it's a lot easier for you to make adjustments, which is what good trading is about, right? When you have an opinion going into the day, you say, this is what's definitely happening, and I'm not even going to see other stuff. It sounds like a really small thing, like why are you making such a big deal about it? It's a huge difference. And you know where it manifests? It manifests in two places. But first, it manifests in monster losses because you constantly hold trades that become small losses and it become much bigger trades. And you say, I know the stock or it's coming back. manage the position, which we talked about a couple of videos ago, maybe last week. If you still like a position and it's not working out, you can always scale back. You don't have to kick the whole thing out. Leave it in your position somewhere, even if it's just for 100 shares, and you can watch it with reduced risk exposure. And then as it moves back in your favor, if it moves back in your favor, you can always put those shares back on. And if it never comes back, your exposure is, let's say, 80% less than what it was, but you still have, still are monitoring it there. The second one is you actually miss opportunities that are obvious because the market's been well bid the last few days. And again, for Penny, if you're not sure what well bid means, it means that you have a higher high and a higher low on any time frame. In this case, we're mostly talking about the daily charts. And if the stocks keep going well bid and the trading above the open and the trading above yesterday's high and the closing price, you still have a situation where you're in buy mode. So if you want to buy, get long, you pay attention to those things. But if you go into the day saying, I think the market is overbought, and again, I hate that term, but let's say the market, you believe that the market's about to turn over or there's too much buying has gone on because we're up 20% or whatever the number is. You get to that point when you're not even seeing the other side, when you should just still be long because there's no reason to look for a short other than your opinion. So I'm going to go over to the charts. I hope that helped you guys out. So we are going to now take a look at this. And finally, you can see this is actually from this morning. Finally, somebody actually is putting context on this. If you watch the talking heads on the news, a lot of people are saying the bottom's in, blah, blah. The bottom's not in. Obviously, a 21% rally in the Dow is super exciting for portfolios. It was nice to see the market come back. But this hasn't gone away. I'm not going to mention, I don't want to sensationalize it like a lot of other people do. I just want to talk about it from a volatility and a trading perspective. It's awesome, but you still got to be awake. Don't go back into sleep mode where all of a sudden you're just going to forget about your 401k because you believe the market always goes up. Okay, it's very important that you don't do that. You pay attention, and hopefully in these videos you can start to get a structure for what you're supposed to do. So if you happen to be looking at much longer term trades, you should be looking at the monthly chart. If you're somebody who has their own job, you're working at whatever it happens to be, and you're just watching your 401k, whatever stocks you might have, you should be looking at the monthly chart or at the very lowest time frame, the weekly chart, to get the trend of what's going on. But in this case, we're just going to very quickly look at the much longer term. So you can see we actually have Netflix here, and the 20 period moving average, which is nothing more than connecting the dots. It's a line that connects the dots of the close for each one of those periods, and then the next week finishes, it takes that close and adjusts the dot. That's what moving averages do. So you can see right now, despite all the price action here, Netflix is actually sideways. Monster one candlestick, but this is what averages do. Averages take you out of the day-to-day and bar-to-bar and tell you, okay, the longer-term trend of the buying is still up or down. So that's how you want to start to take a look at some of your longer-term positions. So if we look at the the monthly chart of the SPY, the S&P 500, the longer-term trend is still up. It's just these last 2 months, which again, now, if you could read the tape as I'm hopefully teaching you, you could actually see now that this from here to here to here to here, that was 4 months of well bid. So now you can see what that means, right? Higher highs, higher highs, higher highs. Actually, this is actually 1, 2, 3 months, and then this year was the final one. But now you got 2 months of well offered, and obviously monster well offered. So you have short-term well offered versus long-term bullish trend. So you have a conflict. So remember what I talked about. You have your higher time frame up there. Not your higher time frame. Your perfect trade, your A+ trade, which is this stuff, right? The longer-term, short-term order flow is to the upside, and your short-term momentum on the weekly chart was the monthly chart was to the upside. So that was you're working up in your A trade, and that's you were making all new all-time highs. Now that we're in conflict, you're moving away from your perfect trade. Now you have to make decisions, which means that you probably have to make shorter term decisions if you're on that shorter time frame. If you're on the longer time frame, those are much, much different decisions. However, you can still use the same chart patterns. So what we're going to do now is we're actually going to go into the daily charts and take a look at some opportunities to possibly short sell today. So you can obviously see now the perceived resistance level in the SPY, which in this case here is the 20 period moving average. And I say perceived, very, very important, and you want to write this down. I'm sorry I'm doing that, is moving averages are areas that are just that, averages. And you want to use those as levels where you expect price to hold support, or in this case here, where you expect price to hold resistance. You still want to confirm entries or exits by the actual price action on the candlesticks. So in other words, if we're expecting this level to come in as resistance today, let's say the market trades up into resistance, we still need to see a reversal before we initiate a position. It's an anticipated place where we expect to find support or resistance because it's a moving average. It's not an absolute. That's definitely something you want to write down. So what would the trading opportunity be today in the SPY, for argument's sake, if we were a short-term active trader and we wanted to trade it as a short sell? Remember the terminology I just used. Short sell means you're selling stock you borrow from your broker dealer, anticipating prices to go down. Or if you're an options trader, you buy puts expecting the price to go down. We would be looking for the SPY to open up higher into anticipated resistance. If we open higher and start to trade below the open, we have some confirmation that selling is coming in, and that will be the signal that a short sale could be considered. So again, what's interesting is if you look at some of the other stocks that we normally pay attention to, like Amazon, Amazon is actually now above the short-term momentum moving average a little bit more, and that will be one of the better stocks to be taking a look at from a more aggressive long. And when I say aggressive, I mean aggressive from a confidence perspective, not from a get aggressive with share size and that kind of thing. But again, getting into reading the tape, right? And this is really, really super cool here. I'm actually glad this just came up. So I'm going to remove the moving averages, and this is why I do a lot of my analysis without moving averages, because you could definitely make a case that Amazon was above all those moving averages, right? But now you take a look and you look deeper into, you know, like I said, I don't play an instrument. I'm probably tone deaf, but when you read into the notes of the song, which is the individual candlesticks versus the whole song, which is the big chart, right? We have 4 days of resistance here. We have 1, 2, 3, 4 days of resistance that we couldn't get through. And then you also have resistance going back here to earlier in March, the beginning of March, end of February. So what are the odds of a profitable trade long in Amazon? And how much room do you have? How much profit potential do you have there? You don't have a lot. So heading up into that, it would need to clear this level to look for profit potential. And then even then, you got some minor resistance there. So when you're looking for a trade opportunity, you want to find something that has room to go to justify the potential risk. Okay, so if we are looking to the short side, and this is definitely something that we're going to take a look at today as a group, you would actually be taking a look at some stocks that actually were negative the last couple of days while the market was strong, which actually Tesla happens to be. Now, does that mean that you go into the day just saying, I'm shorting Tesla today? No, you still need to confirm that today's order flow is in sync with the longer term order flow, which in this case, the downtrend from the catastrophe that we're in right now, you have a pullback, which in this case could be considered short covering, right? And short covering is different than buying. Short covering, as I said before, covering a short means that's buying to get out of a short. That doesn't necessarily mean it's new buying to initiate a new long. A lot of terminology in there, right? So Tesla actually had a reversal. So Tesla and Roku actually both pulled back. Roku actually pulled back in a little bit more positive momentum. So it's interesting that if you were looking to short sell a stock today, you would first look to stocks that had relative weakness yesterday or the day before, and you would also go into your scanner. Now, ironically, we actually have 214 stocks that meet the bearish criteria to look for a potential short sale today if the market rolls over. But remember what we said to start out today's video. We talked about that you don't want to be blindsided by going into the day with an opinion. The opinion is we have some resistance up ahead and the market could potentially reverse. However, if the market opens flat, maybe even opens a little bit lower, but we start trading above the open and trading above yesterday's close, you have some positive signals. If you go and watch the video from a couple of days ago about how to find the right stocks after the market opens, use those indicators of change from the open, change from the close, and then you actually are looking for longs as long as there's profit potential on those trades, meaning you have room to go. So that's basically how you would set up today. And if you want, you can actually get into this scan here. And you know what? I'll actually put the scan in there if you want to take a look. I'll drop it below the video. And if you have any questions, you could leave some comments. I'm actually going to create a separate video with some individual stock picks. So if you want to take a look at that, that will be posted here as well. So it is Friday. Everybody be safe. Everybody be disciplined in your trading. Please continue social distancing. It's very, very important. If you didn't read or see the big news last night, the United States has now actually surpassed China in the amount of cases. And we have a significantly smaller population than they do. So it's still pretty serious here, depending on where you live and depending on how much supplies you need for your house. It really isn't where you live. I don't know why I said that. Be safe, be smart, be safe. I hope everybody has a really good weekend, a really good day of trading today. If you find the video helpful, please subscribe. That would be awesome. I really appreciate it. And I'm going to drop this scan below so you can take a look and see. Make your own personal list of stocks that might meet your criteria. And also, again, have those same list of stocks that you normally watch. And if you happen to be trading positive like we did yesterday, definitely continue to look for the long side, despite the fact that we've been up 21%, because the market's always right. That's really what it comes down to, all right? So have a great day. Have a great weekend. Be profitable today. Be disciplined today. And most importantly, be safe, everybody. Have a great day.